Hi, welcome to the Crypto Republic. Before we dive in, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Let's get right into today's video, because what's happening behind closed doors right now is absolutely mind-blowing. For years, we've talked about XRP being the bridge, the missing piece that would finally connect crypto to the global banking system. But after what's unfolding in 2025, it's not just theory anymore. Ripple has quietly opened a backdoor into Wall Street itself, and most people have no idea how deep this goes. While retail traders are chasing meme coins and ETF headlines, institutional finance, the same old guard that once mocked blockchain, is quietly wiring their system straight into Ripple's infrastructure. And if you know how to read between the lines, it's obvious. XRP is no longer waiting to be adopted. It's already inside. Let me set the stage. Wall Street has always operated like a fortress, massive, slow, and nearly impossible to penetrate. Think of it like a medieval city of Florence in the 1400s, where the Medici family invented double-entry bookkeeping. That one innovation turned ledgers into weapons of power, giving bankers a view of the entire global network, long before their rivals even understood what they were seeing. Now, fast forward 600 years. Ripple is doing the same thing, but this time the ledger is digital, borderless, and instantaneous. In 2025, we're witnessing the moment where that digital ledger starts merging with the infrastructure of Wall Street itself. We're talking real-time liquidity systems, institutional payment rails, on-demand settlement layers, all quietly being rebuilt using Ripple's technology. And the twist? It's not always a press release or partnership headline. Sometimes it's an integration chain. A banking API plugs into a treasury network. That treasury network runs on Ripple's newly acquired infrastructure. Suddenly, the world's biggest banks, without even realizing it, are running flows through Ripple's rails. And that's the secret door nobody's talking about. Let's talk about how this works. You've got major financial institutions from New York to London, all dependent on corporate treasury systems to manage trillions of dollars in global liquidity. Those systems track every inflow, every cross-border position, every ounce of liquidity. And in 2025, many of those treasury systems are now directly connected to Ripple-owned networks. This means when a bank like Citigroup or Morgan Stanley moves corporate liquidity data through those systems, the plumbing underneath the rails are quietly Ripples. It's like discovering that the pipes under Wall Street aren't steel anymore. They're digital, and Ripple owns the blueprint. And that's exactly how revolutions happen in finance, not with noise, but architecture. Think about the telegraph in the 1800s, when Western Union laid its cables. They didn't announce a revolution in communication. They just connected city to city. But once the wires were in place, it changed the world overnight. Ripple's doing the same thing with liquidity. Let me give you a mental picture, okay? Imagine you're a corporate CFO managing liquidity across the US, Europe, and Asia. You log into your dashboard, and you can see every balance, every position, every transaction in real time. You press a button, and capital moves instantly from Frankfurt to New York in 3 seconds. That's not traditional SWIFT. That's instant settlement through Ripple's network, with XRP acting as the neutral asset underneath. This isn't speculation. This is structural. Banks aren't just testing blockchain anymore. They're depending on it now. And the more they depend on it, the more XRP becomes indispensable as a universal liquidity bridge. Because every regional currency, every CBDC still needs one thing, a neutral asset to move value across borders. And that's where Ripple's designed XRP to live. You know what this reminds me of? The late 1990s when Wall Street laughed at the internet. They called it a toy. They ignored Amazon, dismissed online payments, and said e-commerce would never scale. 5 years later, every single major investment bank had an online trading platform, and the internet became their lifeline. We're watching the same movie, just with money itself. Except this time, Ripple is the infrastructure, and XRP is the data packet. The irony, the same banks that fought decentralization are now plugging into the very network designed to bypass them. And here's the kicker. They don't even have to adopt XRP directly. By using systems built on Ripple's rails, they already are. That's why this isn't about hype or price action. It's about inevitability. Let's zoom out for a second. Every few centuries, the financial world goes through what historians call a liquidity reset. The Medici ledger, the Bank of England's creation of central banking, the 1971 end of the gold standard, and now the tokenization era. This is the fourth great reset, and just like every other, it's being led not by governments first, but by the builders of infrastructure. Ripple is quietly positioning XRP as the liquidity spine for this new system. When bonds, commodities, and currencies all exist as tokens, they'll need a universal bridge to move between ledgers, not a crypto, a bridge. That's why when people say XRP is just another altcoin, they're missing the point entirely. This isn't a coin, it's infrastructure. Now think about this. If you're Ripple and you know that your network is about to handle institutional volume from Wall Street and global treasury systems, what do? You accumulate, you strengthen your liquidity engine, you position your bridge, asset to scale. That's why Ripple isn't buying speculation, they're buying certainty. While retail investors argue on social media about price predictions, the institutions are preparing for the liquidity era. Every acquisition, every treasury integration, every cross-border test, it's all pointing towards the same outcome. A world where XRP becomes the silent settlement layer beneath institutional money. This is no longer Ripple chasing banks. This is banks using Ripple by default. We're entering a phase where cross-border payments will sound as outdated as cross-border emails. Because once you experience instant permissionless liquidity, you never go back. Just like we stopped paying for text messages when WhatsApps appeared, or stopped mailing letters once email became standard, this is that same exponential curve, and XRP is that protocol riding the slope. The next generation of finance will not ask what blockchain a payment runs on. They'll just expect it to move instantly. And when that expectation becomes reality, XRP will already be there. You can almost hear it in the language of central banks and treasury executives now. They don't say blockchain anymore. They say real-time settlement infrastructure. They don't say crypto. They say digital liquidity. That's the rebranding of revolution. It's like the early electricity grid. People didn't buy electricity tokens. They built the wires, flipped the switch, and the world changed overnight. Ripple is laying those wires, and XRP, that's the current flowing through them. Now, I know what some of you are thinking. This all sounds incredible, but the price isn't moving yet. Let me remind you of history again. Amazon was worth pennies in 2001. Apple was declared dead money in 1997. Every true infrastructure play looks boring right before the explosion. So when you see sideways action on XRP, while institution integration explodes behind the scenes, that's your signal, not your setback. Because once corporate liquidity, CBDCs, and tokenized assets start running on the same rails, price doesn't have to chase hype. It chases utility. And that's when the multiplier effect begins. Let's wrap this up. For the first time in history, the backbone of global finance and the rails of blockchain are merging, and Ripple's the architect. Wall Street's secret door isn't a metaphor anymore. It's a network of integrations, acquisitions, and liquidity corridors that now all point to XRP. Whether directly or indirectly, the outcome is the same. XRP has entered Wall Street, and when the dust settles, those who understood the architecture before the headlines will be the ones holding the keys. So ask yourself, do you want to be the person reading about it in the paper or the one who saw it coming before the door opened? Because make no mistake, that door is opening now. Let me know what you think in the comments below. Are we witnessing the final phase before full-scale institutional adoption, or is there still one more move to come? Either way, it's clear. The walls between crypto and Wall Street are falling faster than anyone expected, and Ripple's holding the blueprint. As always, know what you hold, stay informed, and remember, the future doesn't wait for permission. This is the quiet revolution. This is XRP's secret door into Wall Street. If this opened your eyes, smash that like button, ring the bell, leave a comment with your thoughts, turn on notifications, and most importantly, subscribe to the Crypto Republic, bringing you the truth about XRP, global banking moves, and the wealth transfer already unfolding. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.